Welcome to our new video series. Here, we'll show you the most important information every shareholder absolutely needs to know. Today, we're talking about the income statement. We'll explain it using Microsoft as an example. In an income statement, you'll find the company's revenues, costs, and profits for a specific accounting period, usually a fiscal year. For Microsoft, the fiscal year always ends on June 30th. In the fiscal year 2025, Microsoft generated almost $282 billion in revenue. Remember, as you can see below, revenue equals the number of products sold times their price. The more products a company sells and the higher the prices, the greater its revenue. If you subtract the cost of production from the revenue, you get the gross profit. In the fiscal year 2025, Microsoft achieved a gross profit of almost $194 billion. But a company doesn't just incur costs for producing goods and services. In addition, there are expenses for research and development, sales and marketing, administration, and general management. If you subtract these three cost blocks from the gross profit, you get the operating profit, also known as operating income. Why is operating profit so important? Because it shows you how much profit a company generates solely from its normal business operations, before taxes and other costs. Let's take Microsoft as an example. In the fiscal year 2025, the operating profit was an impressive $128.5 billion, as you can see in the income statement. In addition, every company has to pay taxes and bear other costs that have nothing to do with normal business operations. If you subtract these from the operating profit, you get the net profit. If you divide this amount by the 7.4 billion outstanding shares, you get earnings per share of $13.70. This exact amount is what you are entitled to as a shareholder if you own a share of Microsoft. To assess a company's profitability, you look at the profit margins. You get the operating profit margin by dividing the operating profit by the revenue. You calculate the net profit margin by dividing the net profit by the revenue. High profit margins are a sign that a company is operating profitably and has its costs well under control. Now you know how an income statement works. It shows you revenues, costs, and profits at a glance. On the next page, you'll find a summary of all the important formulas from this video. If you enjoyed the video, feel free to subscribe to our channel to get more content that will strengthen your financial knowledge. Take good care of your money, and take even better care of yourself. See you soon.